Good afternoon. This has not been a good week. And looking back at the charts, we have been having these series of good week, bad week, good week, bad week, and we're getting buy signals and sell signals, and about the time you get sick of that is about the time the market's going to begin to move one way or the other. And I thought for sure it was last week because of the China thing, and we had a lot of talk about La Nina coming back, and odds are that we're going to could get a heat ridge come in. Well, that all kind of evaporated, and Monday morning we started out the week in corn with a key reversal down, and ended the week with a key reversal down. And a key reversal down is when you, on a daily basis, when you take out the previous day's high and low and close below the previous day's low. It's almost like saying, well, I've digested everything I learned yesterday, and now that everything I learned today is counteractive to what I learned yesterday. And so my perception is, as a market maker, is that it's worth less today than it was yesterday. Same thing on a weekly basis. When we've done this on a weekly basis, it usually is a pretty negative technical sell signal, especially when followed in the same week as a daily signal. Today was kind of surprising that we ended the day lower, usually as much as we did, 4 to 5 cents, and that it was July options expiration day. And if you take home a couple things from today is that write this down, that very, very seldom do July calls, in other words, the option to re-own your corn you sold, work out during the month of June. The July calls, ironically, expire in about the June 21st, or that week of the 21st. This happens to be the 25th today, but it's about the week, the second to the last week of trading in June. So if there's going to be any hot weather or any surprises, now you either got to buy the September calls, the December calls, they're worth a lot more. And I used to kind of call it like saying, this is where the rubber meets the road. Those that really want to own grain, you either got to step up and buy futures, or they got to buy expensive options that were more expensive than the ones you might have bought just a month ago that are only worth 30 days worth of usage. They're cheaper. So that's all gone. And usually the traders will tell you that the fireworks starts the Monday after the options expire. And if that's the case, then we've got more downside coming, especially if it's benign weather again. But and it also this weekend and Monday on a daily basis, this week on a weekly basis, also turned the weekly corn short on a technical basis that I use, a momentum indicator that is reliable, but it's we've seen this thing volatility set in where it will buy it and sell it again, and you have to trade a lot more to do that. Problem is at the time that you quit, that's the time that it takes off. So we need to be very cognizant of that Monday morning. If we can't see any change in the weather, then we could gap lower, and that would be not be a good news. The lows that the corn has come to recognize in the past have been on a daily basis have been this 353 and 3/4 level. On a weekly basis, this would be December. We went back in back in September, I believe it was. December corn hit a low of 352 and 3/4. So we're back to last fall's low and or September lows, and then we rallied, into that area where we thought we were going to have a freeze and lack of maturity, and we spent all this time finding out that we really did have the corn out there. So last year at this time, I was thinking to myself, we talked about in June, and I said, what is the market looking for? And we were presuming a record crop back then, or possibilities of one, and the market was in a downhill slide. And last summer, maybe last July, we were talking that, gosh, we could break $3, we could go down to $2.60 even, right back where everything all started, and where this whole bull market due to ethanol and oil and whatever started back in 2006. Well, that got set aside for a while, and now we're kind of looks like we're back on that same track of saying, it looks like if we get a 170 bushel yield, we could have over 2 billion bushel carryover. And if that happens, the market will seek a level that buys more demand, including China, and more ethanol. And so we're seeing that happening now. I wouldn't be surprised to see eventually again. I originally targets earlier this year, before China put a monkey wrench into the outlook for a while, was that we'd see 330 December and possibly $3 corn down the road. If you take a look at September corn this year, Well, actually, we didn't have much September corn because the harvest was late. This year, we're early spring and early summer, and drought down south or heat. We're going to have a lot of new crop corn coming in September.